Good morning and a warm welcome to our fourth presentation today, Mayr-Melnhof Karton, which will be presented by Stefan Sweat-Spork, who is Head of Investor Relations and Communications at Mayr-Melnhof. Like always, please feel free to ask any questions you might have by putting them into our chat box. We will record this presentation and make it available on Research Hub a little later today. And not to waste too much of your time, I will now hand it over to Stefan. Stefan, it's all you.
Thank you, Holger. A big good morning from my side, from the part of Mayr-Melnhof. It's a pleasure to participate in this conference from our part. Mayr-Melnhof, well, some of you know it. For those who don't know us, we are a European-based packaging or a European packaging company producing cartonboard and folding cartons, which is the packaging from cartonboard. Our business is divided in three main areas. One division is called Food and Premium Packaging. That's the area where we produce the typical boxes you can buy in the supermarket with cereals, with chocolates, whatever we like, particularly in this season around Christmas. That's a big business. In the second division, we produce Pharma and Health Care Packaging. And you see all our products here on this slide. It's the box, it's the label, and it's the leaflet with the prescription and the details of the medicine. And last but not least, we are an integrated producer, also producing our raw material, which is board and paper. So our business is not only about printing machines, about cutting machines. It's also about big paper machines, cartonboard machines. And in this setup, to be a producer of board and paper and of the packaging material, we are quite unique in Europe. In the board and paper industry, who could be peer groups? It's like companies like Metze Board, like Stora Enso, and in the printing business, it could be companies like, for instance, JPI Graphic Packaging International, just to give you an idea about the competitive environment. Very important for you also to see where we are active. 80% of our sales are European, 11 or 10% Americas, 10% rest of the world. Our sites are very much concentrated in Europe. This gives you also a feeling that this business is quite, I would say, transport and logistic sensitive. So you have to be close to your end markets. However, we also do have some, I would say, non-European business in the Americas and a little bit in the Middle East and a little bit in the Far East, or one which is in Vietnam. The company has about 4,000 customers, and we are operating through exports worldwide. For the question of the US business is a packaging business, so it's a local business which is produced in the States for the customers. They're basically pharmaceutical business, and there's hardly any business, I would say, which we ship from Europe to the US. However, we would like to, but I would say with the current tariff situation, has become more difficult. There are other, I would say, players in the industry who have more, particularly Scandinavian guys who have more US business, and here we see some, I would say, potential backflow into Europe. I will come back to that a little later. When we see how these three divisions contribute to the overall group, well, there are two dominant divisions, which is the board and paper and the food and premium packaging, each contributing about 40+% to sales. And the small, I would say, brother, sister division here is Pharma and Healthcare. It's part of the group since 2022 through an acquisition or through a series of acquisitions, but basically Essentra Packaging, where we acquired the 400+ million business in that year. The pharma healthcare business is quite specialized, and therefore we run it as a separate division. From the contribution, currently food and premium is the highest contributor to the profit, followed by board and paper and pharma healthcare. When we look on the overall size of the company, it's a 4 billion sales company, and well, we operate more than 60 locations, also giving you a feeling it's quite widely spread, but it's an industrial business, so it's a cost business, and it's a, I would say, consolidation business. I'm with the company almost 3 decades, and it has always been cost leadership, which brings you the market leadership, technological leadership in innovations. The company, just for your background, is held about 58% by a family syndicate. The family is not active for several generations in the management of the company. However, they hold some seats on the supervisory board, so they're involved in management appointments, big M&A acquisitions, and bigger CapEx decisions. One question which we always ask as a producer of the raw material and the finished product, how much of the raw material goes into our upstream integration. It's due to the size, is only 15% of our cardboard and paper production goes into the packaging production. Why is this the case? There's 3 basic reasons. First of all, we do not produce all the products the packaging converts. Second, the packaging customer is free to choose the raw material. So there is customers who prefer Mayr-Melnhof board, but also other suppliers from the board side. And last but not least, when we are active in different geographies, like in the Americas, it's well, more of the board is sourced locally. Now, giving you a short first summary, a global leader in fiber-based consumer packaging. We're operating in 13 or close to 30 countries with a strong foothold in Europe. So the European economy and the European consumption is very important for I would say the growth and I would say the development of our demand line. Last but not least, well, we have big business with consumer goods producers, pharma producers, and also with retail, because we're not only engaged in the branded products, we're also doing the private label business. We are vertically integrated, and the business as such, which is a production from recycled and virgin fiber, and all the packaging can be fully recycled. So we have also high ESG profile in our activities. What's the investment story? Why do we have our investors? What they are looking at? Why do they like us? It's, I think, our market leader position, which has always been, I would say, based on cost, technology, innovation leadership. It's the long-term perspective. We've always been engaged in acquisitions and organic growth. So both sides, the competitive side, but also to grow the business geographically, and also to scale up the business is very important for our long-term development. As a long-term orientated company, a solid financial foundation is key to the business. Sustainability, I would say, has been inbuilt in our genetics before we even spoke so much about sustainability and ESG as nowadays. And I would say, last but not least, with the shareholder base and with the long-term management team, where you get what you see, and we do what we promise, and we always keep, I would say, a managerial approach to the business, and it's a hands-on, I would say, business, all about Mayr-Melnhof. What did we achieve in the past, or where did we take the company in the past 5 years? There has been quite some future-oriented transformation in a challenging environment in the past 5 years. I think very important to know is that this company has taken a new markets focus on, with higher focus on virgin fiber cartonboard. Beforehand, we were more or less 80% based on recycled fiber. Virgin fiber is stiffer, is less packaging weight, can replace plastic in a better way, and shows overall higher dynamics than the recycling board, although we have also a leading position there. So nowadays we can offer recycling and virgin board from one hand, which is also appreciated and by the customer, and we are now a leader in pharma packaging, although in more, I would say, smaller scale business. It's a nice business because it's a specialized business and you can only buy into this business. So going from a pizza to a pharma board is a pharma carton is quite would not work. We divested low-performing assets. We closed low-performing assets. So it's about the consolidation on the market, followed also by an internal consolidation. And we sold off non-profit, non-core business, which is the TAN Group. Some of those who know us for quite a while know about this business. It's a business which printed on the paper around cigarette filters. We divested because we said this business reached a record result in the current year. We believe this is perhaps no more feasible in the future. That way, the industry for this business becomes more integrated. So you have to be a producer of the thin paper and the printing as well. And it's being a more globalized business and specialized business, needing further investment, which we see we will not, concentrating on anymore. So this was sold off with a very good price and a very high return on the initial investment. Other investment activities concentrate on efficiency, sustainability, innovation. So I think the company is very well invested in its core business activities, and we continue, I would say, all kinds of optimizations, particularly in digitalization and automation. When we go through to the long-term performance, you see that the company from 21 to 22 almost doubled in size. This was the expansion. On the other hand, we had a sharp fall in the profitability due, I would say, to the environment. We have seen high underutilization in the overall industry, and which reduced the pricing power. On the other hand, also high, I would say, inflation of cost, personnel cost, and energy cost in Europe. This is a picture not seen by Mayr-Melnhof alone. It's a picture which we see for the whole industry. And when we see the current result development, we have been better off than the average of the industry. And I think from the asset base, we're in very good shoes and in very good position for the further development of this business in the future. The balance sheet, well, the company historically had a net cash position. We geared up the company somewhat in order to double the size of the company, and now it's time to reduce debt, which is continuously on the way. You see already in the past 2 and in the current year. When we look on the challenges this year and beyond, I think it's the focus on enhancing earnings again in a highly competitive environment with overcapacities. We are on a good way. Our profitability this year has already increased by 20%. If we exclude the divested TAN business, already more than 30%. So we got a turnaround. We have seen the improvement in the board and paper due to a program which we started just for 2 mills in the beginning of last year, and took it to the whole group in the current year. Fit for Future it is called, which targets on 150 plus structural profit improvement by 27 based on 24. And here we are on a good way, I would say, to compensate market effects by internal self-help measures. We also took the time of I would say, from our position, depressed share price for share buybacks. Currently, we have bought back more than 2.8% of our shares outstanding and spent about 41 million on that. Looking forwards, I think energy savings investments is highly necessary in our energy intensive industry, and structural optimization, where meanwhile closing down smaller plants, concentrating our focus geographically in the low cost production, the low labor cost areas. This is important for us, and certainly we want to grow further in our business, and pharma is here high on the agenda, but also selective on, I would say, opportunistic acquisitions may also be part of the, I would say, midterm perspective. When we did that year 25, I already covered with the improvement, which was important to mention, that the Fit for Future companies program is paying in. When we look into the divisions shortly to round up here, the food and premium division, you see it's quite on the right-hand side, around 10% margin, very steady business, but don't think that this business is a self-runner. It's hard, I would say, it's hard-fought business in order to get in these margins. Here we are supplying big multinational consumer goods producers, retailers, and it's all about cost efficiencies and I would say perfect factory business, which we want to continue. Why did the sales go down? This was particularly the divestment of TAN, which was part of this business until the end of the second quarter this year. When we look into pharma healthcare, we can say, well, not yet much of the top line growth, but more to come. This was in the first 2 years, more kind of a turnaround business. And now we see the first fruit of our measures here, that operating margin is nicely picking up. And we had, I think, the best operating margin in Q3 so far. So we want to take on this development into the next year here. And last but not least, board and paper, I would say that the business, which is quite stable from the sales side in a very competitive environment. On the other hand, let's say we have more quarters now turned positive. The third quarter was a maintenance quarter, so this I would not count as I would say an ongoing lower profitability, but at least from Q4 last year, 3 quarters have been positive. The fourth quarter this year again should be better, and we expect more contribution on the upside from the Fit for Future. However, the overall environment in board and paper is to stay quite, I would say, hard and competitive also throughout the next year. But because I would say players in this industry are quite slow in consolidating and sorting out non-profitable business, but there is an overcapacity which is much higher than in the past. And until this overcapacity is absorbed through consolidation, I think it will be difficult to see substantial improvement. But I would say from our side, I think our program helps to get this business back on track. From the outlook, I already mentioned the main points. I think the overcapacity and the soft demand, well, look, in Europe, is a GDP business. and on a private consumption-based business, and people are reluctant to spend higher for the daily spending. Cartonboard is a daily need today and tomorrow, so the product is good. Our cost position is good, our market position is good. It's just that there is a little bit too much of this product on the market or in the capacity of the market players. And I would say we are here to stay in this business. We are the only one who has a packaging and the board business, so we can keep the balance, and we have a long-term, I would say, strategy in order to further develop our position in this field. And I would say with the global broader setting, also having our production base in the US, this also helps a little bit, I would say, to balance the overall businesses of Mayr-Melnhof. So I think 22 minutes are over. I almost made it in time, speeding up a little bit with my speaking. But anyhow, Olga Nass will now, as promised, take us to the Q&As.
Exactly.
I'm happy to hear your first summaries.
Thank you so much. We do have a few questions, and not surprisingly, since it is a rather cyclical animal we're talking about, there are a lot of questions regarding price situation and cyclicality. Let me maybe start out, and you just reiterated your commitment to the board and paper business. The first question that comes in is related to the board and paper business, and given that it has been loss-making in a few quarters, how strong is your commitment going forward in case profitability is going to suffer? Is there a jump-off point for you where you say, okay, we might consider divesting it, or is it an entrenched part of your strategy that would really need to have quite a few quarters of losses before you consider maybe divesting it?
Yeah, I think that's a fair question. You always have to consider a business which was loss-making or is just little profitable compared to your other businesses. But on the other hand, you have to see what's the quality of the assets. And we see that the competitiveness of our assets are all in the upper half or in the industry. So I think from this, I would say, setup, it would be too early to say, well, we divest. We have divested quite a lot of machines, even assets in the past. Therefore, I would say it's not a near-term would say way which would take, but on the other hand, you should never say never ever. But I would take it as it's our business to stay in. We think we are competitive there from the products, from the geographies. We are the leader in recycled board. However, this board is not growing, but this market is not much growing, but it's a stable position of competitiveness. In the virgin fiber, we are, I would say, facing competition from the Scandis, but we are closer to the customer with our mill in Poland. We are improving our energy efficiency gradually there. So we have a CO2 footprint next to our Scandinavian competitors, which we are, I think, on a relatively highly competitive position, and this gives us confidence that we can stay in this business, and when we can, in the long run or in the mid run, make it even more profitable. Assisted also by our Fit for Future program, which is also enhancing competitiveness on a sustainable basis.
Excellent transition to the next question, which is concerning exactly that, the Fit for Future program. Could you give us a little bit more granularity as to where exactly you expect those cost savings to occur? If there are any costs associated with it that you maybe have not provisioned for yet, and if that is enough to offset a potential cyclical downturn in the industry.
Yeah, I think it's certainly when you say Fit for Future, it's on sustainable savings. You address, I would say, your core areas. It's the area of operations, it's the area of SG&A, it's the area of procurement, and it's also, I would say, development of the top line. However, we believe that the operation side has the highest weight, or will have the highest weight in the improvements. You say, well, it's not an improvement done on the 1 year basis. We are in the starting year. Next year is the execution year. With the result release in mid-March, we will give you more granularity, how much contribution we got from this program to the profitability, how much was the market taking away or adding. So we will give that, I would say, showing that more in detail. And I think it's important to see that there is high potential even from self-help without market aid. And even this year, I would say we would not have achieved the improvement so far in board and paper without the FFF Fit for Future program. And this is going to add even further in the next year. But certainly it's difficult to say and to guess how much butter the market will leave on the bread.
Thank you. Moving on to overcapacity, and you did mention that there's overcapacity in the market that has to be absorbed by potential consolidation. How long do you expect this overcapacity to stay in the market? Because it is masking underlying demand, obviously, but how long do you think this overcapacity to hide the underlying demand, and when do you expect to profit from a clearer, cleaner market again?
Also, these prospective questions is always a bit, I would say, tricky to give a straightforward answer. But I would say in the current year, we have seen the first trees falling. It was quite small trees in recycling and in virgin fiber board, but they happened. And I think if we look into the published results of our peer groups on the competitive side, well, there has to happen something. And I think everybody, without revealing details, has plans to do so. And the longer, I would say, the profit squeeze lasts, and it's probably to last again into next year, the more probable it will be that we see more cleaning up. So from our perspective, I would say the first half of next year would be quite critical, and also the period to look at, and also the period that we see more things likely to happen. And therefore, I would say we are on the way. 26 will be important year for seeing further consolidation.
Great. It is 11:29, so I will end this now. We do have one question outstanding, but in the interest of time, I would like to close the meeting. I'm just posting the link to the next meeting, which will be Ernst Ross, in the chat. So if you want to join that meeting, please feel free to click on the link. Stefan, thanks so much for the insights that you've shared with us. I wish you
Thank you everybody for listening, for joining this I would say presentation. And you're always welcome to contact us directly or via our research here. We are happy to answer and give you also, I would say, individual answers to your questions.
Thank you so much, everybody, and have a great day. Bye.
Thank you. Bye-bye.